Okay, let's dive right into for today's session review. So in today's session review, today's trade was similar to yesterday. It's very easy to trade as we're always looking is what we always want is we want to see the inside here as a value area. And what we expect to always want to see is once we get a extreme side or outside here, we want to take entry, look for entry around here, get entry around here, get entry around here. But the reason for this is when we're looking at volume profile, right? So we're looking at volume profile, let's say from this is volume profile. The volume profile, look at bell-shaped curve in the middle. So you have the value high, value area low. Within this is a 70% where most the price will do their bid and asking of auctions within the zone, which this is the zone where majority of the participant view it as a fair value price. So it's a fair value where they see this is a zone where they can either buy or sell, and then you have the point of control in the middle, and then anything outside in the extreme end 30% of time will always retrace back to 70%, just based on statistical edge. These are what I look for trades. And then if you do any smart money concept or ICD concept, these will be your stop rate or your liquidity rate or liquidity grab. But based on mechanics, this is essentially why these works is because these are fill auctions, right? So if you have decent extreme size, this is 30% of the chance if you try to continue going higher, this is 30% chance continue higher and to create a new building range, right? But 70% of the time it will always retrace. So ideally we want to trade towards a higher probability, right? And so we can highlight it. Let's dive into it. So this is the trade I took today. Let me replay this all the way back here to let's say here, and then I'll kind of step through A to Z what I was looking for. So again, this is also pre-market trade. My session was pretty much done before market even opened. So let's take a look at the 4-hour chart. So on the left hand side here, this is the 4-hour. We have this block, as we mentioned in the previous video, where all these prices are sitting and respecting. And also within the higher time frame, you can see this is outside the fair value, right? So fair value is between here, I'll highlight it here. These are the fair value, right in the middle. So outside the not shade, I mean a lighter shade, these are the value area low, value area high. Okay, so what I'm looking for is once in the higher time frame, type into it, also align to order block or order block or fair value gap here, depends which time you're looking at. Essentially just means there is a imbalance over here that's going to get filled. Once it's filled, we'll move back to balance area. Okay, dive into 1 minute. So 1 minute, this is what I'm looking at during the pre-market sections. What I typically mark out is the hour candle. So this is the hourly candle, and as you can see in the hourly candle, I started around 8:30. So this is hourly candle. Okay, so this was the hourly candle when I first started looking for trade. And as you can see, within the hour, there is not much movement is still within here, but you can see this is the candle. So previously I marked this out as a liquidity grab or an outside zone, and I want to see a retrace back. But what I've noticed is, and the reason for this, that I did not take this trade. So even there is a shift for this one, but I didn't take this trade. The reason being is if I take the from 7 o'clock, which is the hour candle, all the way to here, I typically don't want to trade in the lower quadrants, right? When I'm shorting, I want to be shorting the premium area. So the top half is a premium area. If I'm long, I want a long at a discount. Okay, so when it's already down here, even there is a market structure shift, this become a low probability trade. And plus this already rebalanced to, you can see, it already rebalanced to the point of control and then also in the middle of value area. So as you can see, once it tapped in point of control, the price respected very well and then just continue higher. Okay, now we want to go up. So here is where I look for a trade. Here. So once this make a new high, I move this to the top, and this is above, like I said, in the premium area. This is in the premium zone where I'm shorting, so this is good. Let's check off the list. And also this is in the extreme end of this current high. So, and or if you do buy smart money concept, this is the liquidity grab, but typically what I just refer to is a fill auction, right? So there's a fill auction here, and then there is a shift here, over here, right? There's a shift over here. So, and you see it. So once the shift happens, so meaning this down close candle, blue candle over here, close outside of these consecutive up close candle, I'm looking for short. So I placed my limit order of here, so it's gonna tap into here, and then my stop. And this is very, very, tight stop, only 5-point stop, and then target downside. So this was a 3R trade, roughly, like 2.95 hour trade. So I have my entry here, and then I always take partial. So I'll show. So my entry was enter, and I tap in that here. Oh, this moved way too fast. Okay, so I took majority of my partial off here, so it's around 2R. The reason I took my partial off here is because it's reaching into this value area. Okay, and then also this value, there's also a imbalance order over here. So as you can see, these imbalance order, or you can call fair value gap, whichever you refer. Fair value gap essentially is imbalance. In short, when you look at the footprint chart, these imbalance area, and which is the reason why I wanted to tap in here, I took majority my partial off here, and then you can see tap right into it. I already moved my stop to break even. It came close to my break even stop, and then it just flushed, right? And I took rest of it off here. The reason why do I take rest of it off at 50%? One, right, this is 2.9 R, it's already good enough. I don't try to aim for a home run. There's all these liquidity, lower liquidity over here that could be grabbed, but there's no point aiming for all that, right? Especially when you're already in the value area and also point of control. So if you look at the left hand side, so if I switch to 1 hour, you can see all session profile over here, right? So all these session profile sitting, there's a point of control in the previous day. Okay, there's no, it's not there's no reason for it to move down here, but it's low probability to move to the other extreme end that far, right? Especially one thing you can kind of gauge. Either you use the footprint, if you don't use footprint chart, it's okay, but there's leverage volume profile. So if you draw a session volume profile for day to day, you can see starting from Thursday of beginning of the year, the point of control is here, the next day point of control here, the next day point of control is here. And the previous day, as you can see, is down, 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 and up. You can see there's a shift momentum where a lot of buyers start coming in and they want to push this higher. So when you're seeing this is an indicator that we're slowly shifting momentum into the bullish end and trying to aim for home run towards the short side that become low probability. So typically, I always just take all my position off at 50. And you can see it did grab these, right? It went a little bit lower, but what happened afterwards, right? Like I said, you don't know, you can never predict where it's gonna go. If you say you can predict, great for you, but you will always have chances that'll be wrong, and I don't want, when I'm sitting on roughly 3 RR unrealized profit, to all go into break even. That is not the best way to manage your money, right? Altogether account is not aiming home run every single time. You will take majority of position off and then aim for obvious target. So this is obvious target, And then all these are home run targets. Right down here, you only grab these two liquidity, and then afterwards it shift higher all the way up here. So if you didn't take your position off, this would have been an easy trade, and you just got stopped out for break even for all these effort. All right. Simple analyses to follow. Again, we always look for extreme side to move back to the balance area, right? So if you look at volume profile, it's always moving from these imbalance area to balance area, imbalance, imbalance. So whenever click how price move, you can see it's always like this, this, and then it will create a new value area, and a new value area, right? And so on and so on. Okay, so you want to look for least extreme end outside these value area, right? So these are your dealing range. So if I do, these are dealing range, these are your dealing range, these are your dealing range, right? And in between, these are imbalance, right? So what is going on over here is price will always move. Let's say we are currently here, right? The price will always move from imbalance to balance, imbalance to balance, right? These area will always come out where you view as a liquidity grab or liquidity rate or stop hunt, whatever. These in short mechanics is these are imbalance area where price will go towards and then go back to balance area. 70% of time will always go back to balance area. Okay, they don't typically spend, they only spend 30% of time outside here or here. All right, that's it for today. Thank you. If you find this helpful, please leave a comment and subscribe. Stay safe and happy trading.